A key development in India's banking system over the last month is a significant narrowing of surplus liquidity. The phenomenon has widespread implications as maintaining a vast liquidity surplus by the RBI during the COVID-19 crisis was a critical factor that kept borrowing costs anchored in the economy. With banks no longer flush with the same degree of excess cash as before, financial conditions have become tighter, leading to a rise in short-term money market rates and related borrowing costs. Amid a 9-year high growth in credit demand, banks are compelled to mobilize deposits and fund the credit growth as surplus liquidity has shrunk. Lenders are not only offering higher rates on deposits but also shelling out more to raise funds through certificates of deposits. Let us dwell into how exactly the liquidity landscape has changed. When the COVID-19 pandemic struck India in March 2020, the RBI embarked on an aggressive monetary easing cycle. As a part of this, it infused large amounts of cash into the banking system by purchasing government bonds held by lenders. It also provided options for various kinds of repo operations for banks and access funds at a low cost. Large overseas fund inflows also increased rupee availability in the banking system. The RBI's steps ensured that access to credit was cheap, with money market rates remaining below the policy for much of the pandemic. Core liquidity, which is liquidity in the banking system plus the government's cash balance, was over 10 trillion rupees at the height of the COVID-19 crisis. The daily liquidity surplus has shrunk to around 1 trillion rupees, much lower than 7.5 trillion rupees in March. Last month, there were episodes of liquidity slipping into deficit and banks paying a penal rate to borrow funds from the RBI. This has occurred by RBI's design. It has sold government bonds to banks as well as due to factors such as the high credit demand and the central bank's sales of dollars to protect the rupee. Given that the RBI is tackling high inflation through rate hikes, it is no longer comfortable with excess liquidity, which poses inflationary risks.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.